Thank you, thank you, thank you, thank you. Thank you for that welcome. My name is Mardochee Louis, and I'm an accountant, and I own the MGL Consulting Group, which is an accounting firm based out of Essex County in Orange, New Jersey. So I do accounting, bookkeeping, tax planning, tax preparation, and also offer payroll services. Um, no problem. And I work with business owners and entrepreneurs on a monthly basis, manage their finances. And I also work with business owners, small entrepreneurs, and individuals on taxation and tax planning. So that's a little background about myself. And it's going to be a two-part session today. Today I'm just going to go over, the first part is going to be like a tax checklist. The first thing we're going to do is a tax advisor checklist. Pretty much I'm going to go over some best practices on a monthly basis, some tasks you should be doing, stuff like that. And then in the second session, I'm going to go over some business entities. So like the different type of business entity types. You got LLCs, S Corps, C Corps, partnerships. So yeah. So it's going to be a fun day. Anybody a business owner or thinking about starting a business? Okay, what's your business?
Mine is I have my own private, I'm a private and licensed bartender. Yes, I do have my license for bartending. And it's called Meeting Strengths LLC.
Okay.
What I do is I basically provide services for either a party, wedding, any type of entertainment, for 3 to 4 hours for adults. I don't know about children yet, but right now my main goal is to provide services, bartender services for adults.
Right. That's a good business. It's a good business. I heard like they say the next generation of people, they don't drink as much, so they do mocktails. So maybe that's something that you should look into. Yeah, like the next generation, Gen Z. They say that Gen Z they don't drink as much as us, millennials.
Because that's where I'm getting I get majority of my business from. Like
What?
kids, I set an age. If you're not 21 and older, I will not serve you. I always card you because that is the law.
Right.
I follow the ABC law by book, by hand. And if I serve you, if I feel like, because the law says it, if I feel like you had too much, I can say I can refuse to serve you. So that's why I go off of.
Right. Any other people on the business or thinking about starting a business? All right. You think one? Okay, this is good for you, right? So anybody that's thinking about starting a business or anything like that, this is good information, okay? So I'm just gonna stand right here, okay? So we're gonna start with the checklist, right? So to begin with, right? Say you have your business idea, all right? We're gonna start with you, right? Since you're the mocktail lady, right? So mocktail lady, bartender lady, she wants to start her business. What should she do, right? So she lives in New Jersey. So she should get an EIN number from the IRS site, and you should register it in the state that you primarily do business. A lot of times you get people, they get all these crazy ideas. I want to, register my business in this state, that state, because of secrecy and all this type of other stuff. You should be registering the business in the state that you do business the most. And now that state, especially New Jersey, we're in New Jersey, we're all living in New Jersey. So New Jersey requires you to file an annual report, which is essentially generally like $75. It could be more, depending on your business entity, but generally you have to pay that annually, and it's also a business write-off. Okay, so anything that you spend on your business, you could write it off as a deduction. Okay, so the next thing here that I suggest is getting a business plan. Right, a business plan is kind of like a budget, but for your business, in the sense of it kind of tells you what you should be doing, plans it out. So what's your marketing like? Who are your key people? What's your budget like? What are your projected revenues? Right, what do you plan to charge? Okay, how many clients does it take you? How many sales do you have to have for the year in order for you to be profitable, for you to hit that projection? Is it a realistic projection? You may have to think, okay, based off of my numbers, I may have to increase my prices for me to actually reach my goals. You know what I mean? Because sometimes you have to think of it from a high level perspective and then break it down, as opposed to from the small and bring it up. Because if you don't charge enough, then you may not reach your target goal for the year. You see what I'm saying? So it's always good to work with a professional that can help you with business plans. I help business owners and all that type of stuff for their business plan. So if you want like a specific nuances or a template or anything like that, you can always reach out to me. I'll have a sign-in sheet at the end, and then we'll do a sign-in sheet. So, okay. So the next thing here is, can we scroll down on this checklist?
Yeah, can you help? Because I was trying to scroll down. It wasn't letting me.
Oh, it's not moving.
Give us 1 second.
Where's Michael?
All right.
You can sit right there, Mr. John.
Where'd he go? Where is he? I don't know where it went. Tiffany?
Oh, as far as like connecting it?
No, the
It's
thing.
connected, but did you stop sharing?
I don't think so.
Let me just pull it back up.
No problem. Go ahead.
There it is, but it's not coming down
As far as like on his page?
on
On this.
my
It's
page.
not moving.
Oh, so that everyone on Zoom could see it.
In the room.
Mm-hmm. To be honest with you, I know it's like extending it. Let's see. Call Michael.
Yeah, that's something Michael, because he's the one that's good.
Yeah, he just went to go get the check. He should be up here. Sorry about that.
Sorry, technical difficulties, but we're gonna get it under control.
Thank you. Hey, Mike, we need you right quick. We're in, with the IT stuff. Thank you. I heard you. Bye. Thank you. He'll be up shortly. He just, was downstairs.
Okay. There it is.
Okay,
Okay.
now it's moving down.
All right. So yeah, we'll start with number 3. Yep. Bring number 3. Yep.
Okay,
So all right, we finished. Okay.
thank you.
Good.
We good, I think.
Want to
Yeah.
go? Keep going.
Yeah.
All right. Cool. So all right, we wrapped up business plans. All right. So the next thing, after you set up your business, right, with the state, you got your EIN, you got your business plan, right? So now after you have your business plan, now it's time to get your financing, right? So get your business bank account, right? You can get your business bank account with your favorite lender. And now you can stay right here.
Okay, sorry.
It's all right, no problem. And then and also financing, right? Any business credit cards, any lines of credit, any loans. You could do any research on grants, right? There are some grants out there. NJEDA offers 4 great grants that's going to expire in 2025. So definitely look into that if you want to find out more information. Definitely tap in. Huh?
Is it in the notes?
NJEDA. They offer 4 loans, right? One is if you pretty much they'll pay 20% of your rent for 2 years if you have a brick and mortar, but you have to get the brick and mortar first. Okay, it's a reimbursement. And then now the other one is equipment. If you pay between $5,000 to $50,000 in equipment, they will reimburse you 50% of your equipment costs. So, but you have to. It's a reimbursement. It's not, So also you have to apply before the end of the year. There's one if you purchase, if you got a loan, you got a mortgage. There's one for that. I don't know the nuances on that one. And there's another one on online presence. I think it's up to $11,000 they'll pay for your online website. So you could check out NJD. I don't work for them. I just know that they got that stuff available. But that's like those are big grants in New Jersey. So you open your business bank account, you get your business credit cards or whatever the case is, and get your grants if you can get some, okay? And now once you get these items, your business bank account, your business credit card, all that stuff, you want to make sure you get like some type of accounting system, like a QuickBooks or something like that. QuickBooks Zero right here. All right, QuickBooks Zero. I don't know. Oh, it's right here. I kind of skipped it. QuickBooks Zero, Wave. Those are kind of some common ones. QuickBooks is like the Nike of. It's like Amazon, you could say, or Microsoft, like the more popular one that everybody likes to use. You have these other ones, other brands, Zero, some people like that. Wave is kind of like a cheaper option, okay? And another one that's big is getting a mileage tracker on your phone, okay? So pretty much when you drive, right, for business, every mile that you drive is 70 cents deductible, right? So literally I got like $2 for driving here, you know what I mean? So like you want to track that, but a lot of people don't track it. Oh, I don't know. I drove for business, but I don't know. Well, you should plan for it, have a tracker on your phone or something like that. Everywhere you drive is going to track everything that you drive, and then you just categorize what's personal and what's business. And that kind of simplifies things. And then if you kind of do that for the whole year, you could find yourself with a big deduction. It depends on what it is. I can't, it depends on what you drive. It could be a $10,000 deduction right there, and you have the proof for that deduction, as opposed to just making something up and just plugging a number in, because you want to make sure that you always want to file your taxes as if you're getting audited today. So at the end of the day, you put the support together so you could have it together, as opposed to just blindly just doing anything, right? So yeah, mileage tracker on your phone. It's good to have it on QuickBooks too, because QuickBooks automatically tracks it, and then makes everything all centralized in one system, as opposed to having one here, one there. So yeah, can we scroll down? Yeah. So like I said, you want to link your bank account to the QuickBooks so you can track your performance month to month. So you can say, okay, this is how much money I spent, this is how much money I made. You may be able to, now you can make better decisions. You can say yes on certain things, you can say no on certain things. Maybe you need to, before the end of the year, let's say it's like November, and you know how much money you made, and you know what your tax bill is going to be like. Well, instead of paying the tax bill, why not spend the money on something that's going to help your business? Maybe it's some type of training you can do, or maybe there's a type of equipment you can purchase, that you can write off, as opposed to paying the taxes, or just owing them, the IRS, the taxes, and just leaving it and just building interest. Just write it off, and then you don't have that problem. So definitely important to keep your receipts, right? Receipt maintenance is very important, especially if you're not organized. So if you have an organized system like QuickBooks and you're kind of keeping everything organized, you can track everything. The IRS requires you to keep a receipt for anything above $75. Okay, essentially anything above $75. If you have an organized system, they require you to keep. Now, if you do not have an organized system, meaning you don't have QuickBooks, you're just kind of like doing your own thing, you're just kind of writing it off, whatever, they want you to keep every receipt. Okay, the bank statements aren't enough, because the bank statement doesn't tell you what you purchased. It doesn't tell you the date. It doesn't tell you line item by line item what you purchased, because you might have the bank statement that says, okay, $500, but only $300 is tax deductible and $200 is not. So they want to be able to see that. So you want to be able to save all your receipts. Some receipts might come in the form of a screenshot of an email, right? If you buy on Amazon, right? You buy like my bartender lady, she buys some equipment on Amazon, right? Or a bar cart, she buys a bar cart on Amazon. She's just gonna screenshot the email, says that have the details, of what she purchased. So now, yeah, definitely important to keep your receipts. And now this is, can you scroll down a little bit to number 7? So, stop, freeze. So this is kind of like what your computer desktop can look like. All right, this is an example, right? You can have a folder, say your business name, okay, whatever you want to call it, bar cart, what do you want to call your business?
My business is Me's Drinks LLC.
Me's Drinks?
Yes.
Okay, Me's Drinks LLC, okay? Me's Drinks LLC, we have different folders right here, okay? So we have our bank statements. Obviously, the bank gives you these bank statements on a monthly basis. You can go at any given time, but if you have a regular practice of going down, downloading the bank statement, reviewing your bank statements, seeing how to compare it to QuickBooks, that's a good practice. And you keep the bank statements on file, and you can have every bank statement that you've been in business. That's good common practice. That's what businesses do, okay? That's what businesses do. They save the bank statements and then review their stuff. Also, the folder of the receipts, like I said, the receipts, you keep a folder right here. You have all the receipts, available, okay? Any invoices that you send, some people bill out of invoices, out of QuickBooks. You can maintain those invoices that you've paid, okay? That's kind of similar to receipts, okay? Similar mileage reports. So if you have the mileage reports, like I'm saying, the mileage tracker on your phone, you can save those reports on an annual basis, and you kind of have a a record of them. Okay, your tax documents, you have your tax returns. Okay, you can also have sales tax returns, right? If you're selling physical items, you're going to have sales tax, okay, that you pay to the state. Okay, so you'll report that. Any grants or funding information. So if you receive any grants, any loans, or anything like that, any documentation regarding that, you can keep that on file. Okay, and any quarterly reports. Quarterly reports could be anything. If you have sales reports or or any type of tax reports or anything that's important, you want to make sure you save it down so that if you ever need to reference it, you could reference it. Can we scroll down? So these are just some common deductions, just for example, some common deduction, marketing. You have utilities such as cell phone, internet, continuing education. So if you're educating yourself, those are deductible. Gifts to clients or gifts in general. Generally, gifts are deductible up to $25. So even if you purchase something, for a client, a bottle, a lot of realtors, they'll buy a bottle of champagne. Only $25 is deductible. Can we scroll back up, please?
I'm sorry, I had to let someone in.
Oh, okay, absolutely.
We using Zoom.
Oh, absolutely. No problem. All right, cool. So staging, this is for like real estate. They like to stage properties, and those are deductible, and office supplies. Just some common examples of what could be deductible.
Can we scroll up then?
Oh, can you scroll down, please? Thank you. All right, so now we're making money and everything like that. So now that's when taxes come into play, right? So when we're profitable, when we make money in this country, they want a piece of it. So yeah, so they want a piece of it, so you want to plan for it. So all the income that you make, especially after your expenses, any income after expenses, you want to save 20-30% of that for taxes, or you can make estimated quarterly payments. Okay, so the general rule on making quarterly payments, on your tax liability, the reason why they want you to make quarterly payments is that they don't want you to be too backed up towards the end of the year when you're filing. So right now, 2024 just ended, right? 3 months ago, the deadline is next week, okay? So the deadline is April 15th. So what that means is they want you to pay at least 90% of this year or 100% of last year of your tax liability, or whatever you owed on your taxes. Not the refund, but what the tax bill was last year. So if your tax bill was, let's just say it's $10,000 last year, and this year is, let's say it's $10,000 this year, and it was $9,000 last year, and you make less than $150, well, 100% of last year is $9,000, okay? And, 100% last year, let's say it's $8,000. So 100% last year is $8,000, and on that $10,000, 90% of that is $9,000. So the lower of that of the two is $8,000. So what the IRS would, in that example, the IRS would want you to pay at least $8,000 in taxes by April 15th. Now, if you do not pay that $8,000, there's a late underpayment penalty because you're underpaid, and there's also a late filing penalty. So if you file late and you pay late, it's two different penalties. So and that's how they determine how much taxes you're supposed to pay is determined by 100% of last year or 90% of this year. And if you make more than $150,000, it's actually 110% of last year and 90% of this year. So in that example, we make more than 150. 110% of that is 8,800, and then 9. So it still would be 8,800. You guys following? You good? Okay, cool. Okay, I was a little confusing myself a little bit. All right. So essentially, you want to save for taxes, and essentially that's how much they want you to save and pay by. Now, if you don't pay that much, they're gonna charge you a late penalty. Okay. And now, if you could make the payments, or you could put it into like a high yield savings, put it in a savings account. Let it build over interest. You don't want to invest that too much. I'm not a financial advisor or anything, but it's a little risky investing money that you're gonna need in the short term. Okay. All right. So cool. Essentially, most people, when they first start a business, first starting out, you're not making too much money. Most people start off with an LLC. That's like the start a business. But generally speaking, as you make more money and you don't have any more write-offs, you generally want to switch to become an S Corp because it saves on taxes. Okay, and in the afternoon session, I have an example, LLC versus S Corp, pretty much showing why and how the S Corp is less taxes as you make more money. Okay, so that's definitely important. So generally around like 50,000, 40,000 or so after expenses, you want to start to consider switching to S Corp. But the only thing with becoming an S Corp now, it's more complicated when it comes to filing your taxes. You have to file an 1120S, get a K1, and then that flows through to your personal tax return. It's a little more, there's just more steps to it, and also you have to get payroll. So either you have to hire someone and put them on payroll, or put yourself on payroll, or both. Or something has to give, but you got to get a payroll and on a monthly basis and file a W-2. If you don't, you could be subject to audit.
So if you make over 50,000 in a year, you said, or a month?
In a year.
In a year.
I said month?
No, I just was wondering.
Oh, in a year. So in a year, so essentially what happens is this thing called self-employment tax. Self-employment tax is 15.3%. So what happens is when you're a W-2 employee, you don't have to pay so it's self-employment tax is essentially your Medicare and Social Security. When you get old and you retire, you get Social Security benefits and Medicare, which is the health insurance when you get old. Okay, so then you have to pay into that. So the thing is, as a W-2 employee, you pay 7.65%, which is half, and then your employer pays half. So you pay half, and the employer pays half, which is essentially box 4 and 6 on your W-2. So box 4 and 6 shows how much you paid in Social Security and Medicare, which is 7.65. If you do the math, it's literally just math. Literally 7.6. Some people don't pay it because of whatever nuances of their job, the type of job that they have, they don't pay it. But for the most part, you're gonna have a box 4 or box 6. And then the employer paid half of it for you. But now when you're a business owner, there's no employer to pay half of it for you. You pay the full amount. So the thing is, that can get very expensive on 50K, 15.3%. It's like, whoa. So that's when you want to become an S Corp, and then you kind of split the income, W-2 versus on the K1, because the money that goes on the K1 is the tax savings, okay? Anything that goes on a W-2 is essentially the same thing as an LLC, because you still got to pay the employee portion and the employer portion, but then once you go to the K1, it avoids it completely. So you only pay the federal tax. So your tax savings would be 15.3% times whatever's on the K1. That's the tax savings. Yeah.
Question: can you offset your taxes by like doing charitable events and stuff like that in the community?
You could. Yes, definitely you could. You definitely could. You just gotta do it. I kind of do stuff like that. You know what I mean? So, but yeah, it depends. Yeah, you could definitely donate, charity, do certain things. It just depends how you do it. Yeah, for sure.
I have one more question.
Yeah, sure.
So if you make over $50,000, say last year was a good year, so you made over 50,000.
And this is after expenses. So
After
50,000. What that means is I made 100.
Okay.
And I spent 50. I have nothing left.
Okay.
I put the mile after this. You know what I mean? I got nothing left.
Okay.
I just did well. Like I don't spend. You don't need to spend that much. You know what I mean?
Yeah.
Or the rest was like maybe on your family or certain stuff that wasn't deductible. So like now what? I just pay tax on this? No, you have to file a 2553. So the thing, in order to become an S Corp, you have to file a 2553 in the year in the current year. So for instance, if you want to be on time and file an S Corp on time in 2025, the due date was March 15th of this year. So it's late to do an S Corp for 2025. However, you can still file it. You just got to put an excuse why you were late. My accountant told me late. I didn't know, whatever. Typically, and then once you do that, you got to register with the state that you're going to do business again. So you registered with it the first time. Now you got to tell them, okay, register. Now I'm S Corping. And they got to, so they can expect it. And then, you got to you got to start looking for payroll, So the problem, that's not a problem, but it's just an additional step that you got to pay monthly for payroll. But the monthly that you're paying for payroll overall, if you do the math on it, you're going to pay less doing that than if you were to become an LLC and you're going to owe all this money on taxes to the LLC. You might as well just get the payroll, do the S Corp, and just do that. Does that answer your question?
No, yeah, that does. You know, just in case, because some people might have a good year and make 50,000, but in 2023 they probably only made 15,000. So it's like, do I stay as an LLC or do I transition to S corp? But now we know
So you have to,
you have to make you have to have a net income, meaning after expenses of more than.
net income. So,
Okay.
but also you have to assess why am I making. So, okay, did I have a one-off job? You know, like why did I go over to 50? Is it like consistent income? Was I hustling all year and consistently I just got better? Or was it like, oh, one person just gave me a lot of money? Or I sold the oven. But like, let's just say I'm in the business of selling pizzas and I sold an oven. And that oven made me so much money. It wasn't the pizzas. We don't care about that. We're not S-corping for that. We might have to think of another strategy because if you S-corp, you got to be committed to that. Because now, like I said, it's an increased cost to the S-corp filing too. All this extra paperwork is increased cost to that. Payroll costs money. All these things cost money. So if this gonna cost you money, you better be making money. So if you don't think it's gonna be, if you think it's gonna be like a one-off 1 year and you're gonna go back down, don't S-corp. You might need to. This might not be the route for you. You might need to go somewhere else. You know what I mean? So you kind of have to use your discretion. Because you know where your business is at. You know, you've been in business, especially you've been in business for so long. You know where you at. You know what the client. You know who your recurring clients are. Who refers you clients. It's kind of common sense a little bit. You know, in my opinion. So.
I have a question.
Yeah, sure.
So when you become, like I have my LLC, when you become, when you decide to go to C Corp, does your insurance?
S Corp.
Yeah, S Corp. Do you still, I'm sorry, I said C Corp.
There are C Corps though, but
Yeah, I
but it's a
know.
big difference. I'm gonna explain that.
So, because I have insurance with my business. So is your insurance involved or do it go up to?
Health insurance
No, like because I have
or
my
business insurance.
Yes.
You just gotta talk to the insurance broker.
Okay.
Call the insurance broker.
Okay.
Yeah, call the insurance broker and they'll answer that question. I'm not an insurance person,
Okay.
so I don't wanna. I want to answer your question, but I don't have the answer to give it to you. You know, so you probably need to call the insurance person to see that. So yeah, so okay, so some more things to consider. Retirement accounts, okay? So another thing to consider is, retirement, and, those can be tax write-offs as well, especially if it's an S corp. So that's something to consider as well. When you're doing your deductions, you have IRAs, 401ks, simple IRAs, all a whole bunch of stuff here. And now, some common income tax documents to keep to be mindful of, like income documents. You have your 1099-K, 1099 NEC, and 1099 MISC. Okay, so essentially, what a 1099-K is, it used to be before 2024. If you had 200 transactions or $20,000 in transactions, you would get this tax form. Now they lowered it to $5,000 in 2024. So pretty much by lowering it to $5,000, more people are gonna get it, right? More people are gonna get the letter. So they want to know what people are doing. So they're saying, okay, we're gonna lower it to 5,000 and we're gonna issue these letters. And actually in 2025, it's gone to $600. So if you just make $600.
Oh, okay. Thank you for saying that because I didn't understand what was going on.
Yeah, you're gonna get that. You're gonna get that. If you $600,
I didn't understand that.
yeah. So that means electronic payments. So that's like Cash App, Venmo. No, Zelle is a bank transfer. No Zelle.
I didn't accept Zelle, but now I guess I
You should accept Zelle, probably. Zelle is a bank transfer. It doesn't count. You have Cash App, Venmo, Airbnb, Ticketmaster. Anything that's electronic payments, essentially, you have to kind of ask questions. Electronic payments, like credit card payments. If you accept credit cards, Stripe, PayPal, all those things, you're gonna get a 1099-K. Okay, that's a new rule. That's like new thing in 2025. It's kind of hot in 24 and 25. 1099 NECs. Okay, essentially you're gonna get that if you made more than $600. Okay, so that's a non-employee compensation. Okay, so anytime. Generally, this is the most common if it's like NEC. And then MISC is this, you can get this for a number of reasons, rent, royalties, a whole bunch of stuff. So this is like the miscellaneous. Like this is like everything else falls into this category. So these are three types of income documents, all 1099s. Generally, you can expect to receive as a business for income, generally, okay? Cash, Zelle, cash, similar transfers may not generate tax forms, so, but it still must be reported, okay? So they're not gonna generate a tax form, but, they recommend that you report it, okay? So this stuff is very complicated, all right? Like this is something that I learned over a period of time. I've been in accounting for 12 years, worked for a lot of firms, did a lot of research on my own. And even some of my colleagues that are accountants don't know what I know because I kind of push myself to like know this stuff because a lot of accountants, they're CPAs, but they don't do taxes, they don't do advising. So this stuff is very complex, right? So with that being said, it would make sense to have an advisor that you could check in with, especially as your business is becoming more successful and more profitable and you need more guidance. You want to make sure that, because if the year ends, there's most of the time there's nothing you can do because the year ended, right? You want to be proactive during the year and see what you can do in that year to take the deduction. So I always recommend people, especially entrepreneurs, real estate investors, business owners, instead of you guys having a tax bill at the end of the year and you got surprised, right? To work with someone throughout the year that can kind of give you advice, kind of like, whatever your budget allows, right? So let's scroll down a little bit. Okay, these are some more things, right? So weekly habits, right? Review your transactions, categorize your transactions, reconcile your accounts, upload your receipts, different checklists. Grants. So I talked about most of the stuff already, so we don't need to go in depth. Again, these two are important. So the BOI report was very hot all 2024. So essentially what that means is if you have a business, you have to register your business, all the beneficiaries and the owners of the business. So it's confirmed as of March that you have to do this. So it was kind of like, oh, you don't have to do it, you have to do it, you don't have to do it. You have to do it, okay? And then state filings, if you register in your state, you have to pay annual fees. I mentioned that earlier. And yeah, that's pretty much it.
So the BOI report, is that for LLC only?
That's for everybody.
If you have an EIN, period, you need to file a BOI report.
Pretty much,
Okay.
yeah. It's certain industries, certain stuff, they got like their nuance that they don't have to do it, but you'll likely know if you're in that category. What's up?
I have a question. So say if your credit score is not so good, but you have like an EIN, like what are some advice you give to those that was trying to get like funding from a credit card? If you have a business account.
You trying to get funding? That's a good question. You got to work on that personal credit. Get a budget going. See what see where you're deficient on your personal credit, and start to work there. Because it's a little. But they do have some banks that don't look at credit as much. So I don't know too much about it, but I would just start to do research on that. Or like maybe look up credit cards that or lenders that I know they do it based off stated income. So you can just tell them, hey, I make this amount, and they'll still give it to you. So maybe you can try that. I don't know any banks that off the top of my head, but I know those places do exist. Yeah.